Welcome to the Tomosi Business Training Series. The basis of these sessions is to support the Tomosi Group staff and management to raise their capabilities and performance. This is also a platform to share our experience with young entrepreneurs making an effort to build their startups in Uganda and across Africa. In this session, we continue to explore the principles of basic accounting. Enjoy!
Hello, welcome back to today's training series. My name is Agnes Sakech, and we are going to look at accounting errors and what happens when they occur. Everything that we do, whether you're an accountant or not, there's direct or indirect impact on the work you do and on the work that accountants do. And when errors are discovered, correcting entries are made to rectify them or reverse their effect. This is still yet another process that accountants go through. It's not true that every time everything is clean, the financial reports are clean and all that. We are all human. Sometimes we make errors. That's why there's that process that accountants go through or the accounting department go through to do the correction to ensure that accounts are cleaned up, especially now, this end of year. We are closing the financial year or the financial period. There's a lot of cleanup going through. You go back to see, does this ledger make sense to me? Is there something that is omitted? There's what they call error of omission principle and all that. So we go through this when errors are discovered. We go through correcting these errors, and the errors are still also taken through the debit and the credit. However, you need to take note, however, that the purpose of a trial balance is only test the equality of the total debits, and it's like a litmus test. At the end of the day, the ledgers are scattered within the accounts. There are so many. So the trial balance try to put a summary. If you've ever seen one, it's just a list of the summary of transactions that you've done within a period within a year on the debit side and the credit side. So the trial balance will tell you if it has not balanced, it just simply tells you there's an error, there's omission, something did not go well within the period. That's why this TB or this trial balance is not balancing. It is just alerting you, it is a check that something is not right. Or the ledgers could be right, but you've not picked the correct balances from the ledgers to bring to the trial balance. And once the trial balance has not balanced, even the financial report will not accept. It will reject. So that's why we call it accounting process. It's a step by step. You don't just wake up and say, I need profit and loss or income and expenditure. Then accounts will just print and give. That income and expenditure came from process from the very day that you engage that client into the business to the day that you close that contract or that assignment. Is the trial balance itself or is the financial report itself. All the activities that you've done through that process has impact. The signing, the offering of the services, the expenses you've incurred to earn that revenue, all that comes as a double entry into this. So every contract or every assignment or project you run is an expenditure or is a financial report on its own. Actually, when you go to the NGO world, you see that most of the projects are run independently. You find maybe this is advocacy, this is human rights defenders project and all that. And each and every one of those projects are treated independently for proper evaluation and assessment. So even here, for example, at Tomosi, each and every company has its own financial report, and it's for a reason. And even within the company, we should be able to treat each and every assignment. For example, in TAP, if you're doing a project or you're offering events, you should be able to treat that event as a financial report, as an independent financial report on its own. For you to be able to, actually, it's a good way, it's a disciplined way that you evaluate each and every assignment that you've done or the services you've rendered separately, so that at the end of the day, you're able to tell that this project offers better profit or there's no profit. Probably you're just running on a balanced basis, in and out, there's no profit, or you're even thinking you're getting a loss. So before you consolidate as TAP Media your financial report, probably it's better you start on a piecemeal basis. Start running project by project or client by client and see from this client what is the reward we get. Is it a viable? Does it contribute to the growth of the company? For Coban, for example, you can say this warehouse maybe is it offering value for money, or we are simply offering services to clients? We're not getting the benefits or return on investment. Or Gideon's Men, we can look at assignment by assignment. We can say this region, maybe Kampala, Entebbe, Tororo, how are they performing? So it's just a discipline that one can practice. So it will bring us back to the trial balance, and at the end of the day, the trial balance translates into financial report. Some errors could exist even if debits are equal to credits, such as double posting or failure to record a transaction. If, for example, you have offered a service, accounts forget to issue the invoice completely, and even the related expenditures are not captured, the trial balance is balanced because it has not been affected completely. Or, for example, you've made errors that affect both sides. If an amount of 150 is posted on the debit side, then the same amount is also posted on the credit side. At the end of the day, this equals. So the errors exist, but the trial balance has balance. That goes back to what I was saying, that must a trial balance balance? Yes, it must balance. Ask yourself another question. Does it make sense? Is it realistic? Does it have integrity? Now, integrity is now the point of analysis. The integrity of the transactions that you've captured in the year is very important. It answers you whether your trial balance has balance and whether it makes sense and whether it has integrity. Because at the end of the day, people just rush to produce financial report. That's why sometimes we have this financial analyst and so on. You present your financial report, the person, the gentleman or the lady sits down and begin skinning your financial report. Most times, as the accountants have had hard times in some of these meetings, maybe the board and so on, you think my financial report looks okay, everything is fine, but no. Someone will look at it from the technical bit of it and realize that no, much as it has balance, everything looks clean, your cash flow is okay, but but this part here, receivable, does not make sense. You're saying you've made these sales, your receivable is high or your receivable is low, and there's no money in the bank. So now those are the things, those are the processes now that we go to skin these accounts or analyze it to see whether it makes sense and whether the process was properly observed, to ensure that there are no errors, omissions, or there are no misstatements. Another section of this bit that we are looking at is adjusting entries. This is also a process. Once you've realized their mistakes or their errors, you are in position to do adjustments to correct. It's like, putting things in the right places. Adjusting entries are prepared as an application of the accrual basis of accounting. At the end of the accounting period, some expenses may have been incurred but not yet recorded in the journals. Some income may have been earned but not entered into the books. So these are the things we are talking about. I can give you an example. utilities or services like audit services, you know that and you're sure that at the end of the year you're going to be audited, and perhaps you've not changed auditors, so you know roughly how much. You shouldn't wait, like now we have closed June 2020 as our end of financial year. In accounts, we are expected to provide for this, even if we have not incurred. That's what we are calling accruals. You have to accrue this expenditure because you're not going to wait until you've paid, then you recognize. You are going concern. So why should you not recognize this expense or this liability into the account when you know in any way you're still going to incur it? So we are supposed to provide for this. It's just an estimation. It may not be the actual one. But if we are taking example of audit fees, we already know that these auditors charge us this much, except for disbursement. For this time of their agreement or service, we have agreed at 5 million. Just go back and recognize this or provide this in your financial report or in the books of account, so that when you're closing June 2020, everything is captured. It's what we call completeness in accounting. So you're going to adjust for this. Or you've earned the revenue, you've generated, you offered services, but by the time the year is ending or the month, the period is ending, this income was not captured. Once you've realized that, adjust it for purpose of completeness. That is when now when you bring in the journals are just like templates, as we earlier talked about, to enable you pass some of these transactions that you've not been able to do before, to ensure your financial report or your transactions are complete. Adjusting entries are prepared to update accounts before they are summarized in the financial statements. These are just the processes that financial people go through to produce the final reports that we normally hear about: the income and expenditure, the financial position, the cash flow, the statement of changes. All these go through a process. It's just like a patient that has been taken to the theater for operations. You're not just taken to the operation table and they start. There's a process. The preparation from the ward, the preparation in the theater, this is the same thing that financial people go through. Stitching, all that. So you find the doctors are there, the nurses are there. So accounting process is more or less like that. There's a process that these reports go through for it to come out meaningfully and with some quality information in it. Adjusting errors are made for accrual of income, accrual of expenditure, which I've already talked about, deferral of income. For example, you might have received money in advance. A client has paid you ahead of time. Your year is ending June, like some of her companies, but this client has paid you beyond June. So this income that you've received in June, some of it does not belong to this financial year. So what accounts are going to do, they're only going to pick the element of that financial year. For example, if the client has paid 6 months and is ending December, so out of that, they will only pick what is relating to maybe May and June. Then the other remaining 4 months is what we are calling deferred income. And this is a liability. This is not your money because you have not yet offered the service to that client. So it's money you've received ahead of time or in advance. It is in your custody. You're free to use it. But at the back of your mind, you must know that this is a liability. This is the money that I have not earned. And if anything goes wrong or the client changes their mind and say, no, I no longer need your services or I no longer need your good, you must return that portion of the money that you've not earned. So in this case, for example, the money relating to the 4 months If you've paid rent for 6 months and the client have only utilized your space for 2 months, the 4 months rental is a liability, it's not yours. So you take it to liability. So all this needs adjustment. Or for example, you've deposited money ahead of time for some services. Maybe if you're doing advertising and you deposit money on NTV or on New Vision Monitor, you haven't utilized it. Now, on your side or on our side, these are assets. It is money out there we have paid in anticipation for services to be rendered to us. But should we change our mind, or should the situation change and we are not able to utilize that money, whoever we have paid this money to must return this money to us. So these are called prepayments. You've paid beforehand, you've prepaid. It is out there, it is yours. So we take this as asset on our side if you are the ones who have paid. But if you are the ones who have received, this is a liability, which we are calling deferred income. This process must be complete. Should any of the process in accounting be missed out, then be sure that your report is not correct. Your report is incomplete. Whatever, and most time you hear as accountants, we are lamenting, or people are taking time to prepare the reports and all that. Something is not wrong. It's not right. We either have errors, there are things that have not balanced, because the first initial stage of accounting process was not observed. That is how bad or how good this process can test you as an accountant, but also as a non-accountant. Should you miss out on any of the source document, for example, sales, if you've not captured in January and you are in December, you are now attempting to prepare your report. You've not captured these sales and the client paid the money. So the bank will tell you this money came in. The sales will tell you, no, we did not make any sales. So then now you go into the struggle of identifying, where is this error? Where did this money come from? Most cases, you see suspense account. If you don't have proper trail of your records, source documents, you're going to have problem balancing your account, because the good thing, this account is automatic. It will detect whether you like it or not. To tell you, no, you're not going to force me to go. There's a problem here. You need to correct before you move further. Even if you forge your way, at the end of the day, what we call the cash flow statement, which we looked at in the last 2 weeks, it will tell you, Madam or Mr., there's a problem. And because there's a problem, we cannot balance. You go back and audit your trail or your source documents or your accounting processes. So if we don't observe these processes well, it will cost us time. There's no timely preparation of reports. And this also explains why sometimes you walk into the accounts and you ask, I need this information. Accountant will take that time to prepare. Perhaps something is missing, then goes back. But if all of us were observing and respecting, disciplined enough to observe the accounting processes, as long as we are stakeholders, if you know you're in human resource, provide information that accounts need. The payroll, have your payroll complete with all the supporting documents. If you're saying contracts, you can't ask me to pay so and so this much when there's no contract to show that this is the amount we are supposed to pay. Share with us the contract as you introduce the new employee. If you don't do that, we don't have evidence to capture this in our record. And at the end of the day, we'll begin paying this person, but against no contract. If you've gone out for field work or something, you are given advances, maybe for 2 million. This included fuel, this included coordination, this included transport. When you return, please submit in your accountability, because when you don't do that, you're going to affect the processes. Remember, we have withdrawn this money from the bank in March. You went to the field in March. You've come back in March. These transactions you've done or this field work you've performed is supposed to affect the report for March. But you walk in with your accountability in July. So do you have an idea of your action, the impact that it has on the report of March? The report of March will not capture your expenditure because you did not bring in your accountability. So in March, your report will show higher profit, for example, if I may use that, when actually that's not the true position. So you're going to sit down and take decision and say, since we have high profit, let's now do this, and that, when actually it was not true. Then it comes July, your profit shoots up. Why? Because you bring now accountability in July. So you bring distortion in the reporting, and it is the reason why this training is very important, that each and every one of us understands what accounting processes is and what impact it has if we don't follow the right procedure, if we don't work as a team. Definitely at the end of the day, we like it or not, you're an accountant, you're a non-accountant, your action has impact on the reporting. And so the accounting process calls in everyone to be observant, to be disciplined, and to understand and appreciate that when you talk of finances, when you talk of accounting, it's not for people who took that direction of accounting. It is for everyone. At the beginning of this series, I said, being it in the company, being it at home, we all practice accounting in one way or the other. Even at our homes or at individual level, if we don't observe some of the processes here, there's an impact. If we don't practice small budgeting in our homes, it has an impact. In those small businesses that we run aside from our work, there's accounting. So it is important that every individual takes a little bit of interest in accounting. Even if you hire an accountant, you must also understand what accounting is, because if you don't have any slightest knowledge, I'll walk to you with cooked account, what literally cooked. It is not based on facts, and you're going to take it for gospel truth when actually I'm misguiding you in your decision. But if you have some little knowledge of accounting, even if you're not practicing it, you're able to question me, or you're able to query whatever information I give you. So that's the beauty about accounting or non-accountant taking interest in accounting, so that you're able to know. You don't just take whatever I've brought to you and say, sign this. You must ask, why am I signing? Last time, this and this took place. You're saying you're spending this, but your sales is going down. So all those questions only come if you've picked interest in the accounting processes. So, listeners, this brings us to the last session in accounting. Hopefully this has been beneficial to all of us. And should you have any comment or query, or you need clarification, do not hesitate to send us email or visit our website.
Enjoyed this session? We would like to hear from you. Please give your feedback using the Google form attached, or email us at info@tomosigroup.ug, and visit our website on www.tomosigroup.ug, Or tune into the Tomosi Business Series on Facebook and YouTube to enjoy more of our weekly training podcasts. You can also visit our offices at Tomosi Business Park, Luzira, Port Bell Road, or call 0789 901 356.